Hey yo, what's going on, gang? It's been a little while. Haven't seen or talked to y'all in a minute. Yeah, I've been pretty busy doing a couple things, but hopefully I'm back and consistent now. Continue subscribing, continue liking, and my channel is really growing this year. Really like that. So, before we continue anything, you're already gonna like this video, and I'm very sure of it. So just like the video. All right, just like it now. Just do me a favor, just press the like button now. And then you can also press the subscribe button, bro, because listen to my beautiful voice. You definitely gonna want to hear this on a regular basis, my guy. So, just hit the subscribe button, hit the like, and then we're good to go. So today's gonna be a pretty short video, because honestly, it's very simple. And I kind of just want to show you guys something that I saw on USDCHF that I think is very interesting, and something that you guys need to keep in mind when you're trading. So, if you can see, I like to start on longer term time frames, see what's happening in the longer term, right? And clearly, in the longer term, US dollar, CHF has been trending downwards for the past 2 decades, right? But when it comes to an intraday trader, this is not necessarily the most important factor. You know what I mean? You can still buy when things have been going down for decades. You just need to look for the proper snapback opportunity, right? Because things go like this, right? So you can still buy at these points, and sell at these points, even in a downward trend, all right? So longer term, we can see that it's been going down. But then recently, the past, say most recent decade, what the hell is this? What is this? Really, what the hell is this, bro? This has been going sideways for the past 10 years. So if you ever traded on USDCHF for the past 10 years, you've probably been doing a lot of scalps, Now, something that's very interesting to me, it caught my attention, was these major lows down here, right? These major lows down here. Now, when you see 1, 2, 3 lows all on the exact same point, I think about smart money. Smart money is going to attack these 3 lows, like they did here, right? And why is that? That's because there's a lot of liquidity below here, right? So people will put a short position here, right? The average retail trader put a short position here because this is a line of support. And so when it's bouncing off the support and eventually breaks down, then they are going to reasonably suspect that it's going to continue to go, more down, right? Which it did for a little while. But evidently, it has to snap back because smart money used this sell side liquidity. So all these sellers coming into the market brings a lot of volume that allows the big institutional banks to buy, because on every side of the market you have a seller and a buyer. Banks have billions of dollars and retail traders only have a couple thousand, tens of thousands. And so they need a ton of retail traders to sell so that they can buy $1 billion worth. And so a ton of retail traders sell as this goes down. And then institutional buyers buy up. Here's something that's also very interesting. Also, you can, let's say also you're a support trader, and here you're trading on the support. You've seen in the past, let's say you're over here, you've seen in the past before that it's gone to this point 3 times around this level of 0.9100, or 0.91500, and it comes back down here. It's reasonable to suspect that it might bounce back up again, like it did, the past 3 times, or even 4 times. But, to no avail, the banks have stolen your money, unfortunately. And so here, you see it blows past those buy positions. And so when you trigger a buy position right here at the gray line, that means you're buying. But when it hits your stop loss, you have to sell back what you just bought. And so that creates a lot of selling volume. And so that creates even more volume for institutions to buy again. Does that make sense? So they manipulate you whether you're a buyer or a seller, as long as you're anywhere around this area, right? Here's something that's also very interesting. Not only, if you were trading in this range, would I have been expecting for a big push down past this level, but if you see this large imbalance between this line and here, it's a large imbalance right here. Large imbalance, right? And you can see I put a red line here a couple, way before this happened, months before this happened, maybe a year ago. And it came right to that spot, right? It came right to that spot. And look at this. This large selling volume in a matter of 1 week can only come from institutions. Retail traders, there's not enough retail traders. Like literally, you would have to be in a group of 1 billion, probably, or like 10 million retail traders for them to consecutive or like coincidentally or at the same time make this chart go down like this, right? This has to be just a couple big billionaire institutional buyers who push this down past these lows right here, 1, 2, 3, collected the sell side liquidity and snapped back up. So this needs to be mitigated, right? This is an institutional candle. This needs to be mitigated. So they had all the sell side liquidity here, mitigated, not only collected liquidity here from the sell side, people coming in and selling here, but they also mitigated their past manipulation. So this is a double manipulation in USDCHF. Very interesting and a great buying opportunity for people who realize that around here. When it touched this imbalance, I would have had multiple buy orders in here. Keep your stop loss right here. Maybe like below this candle or something like that. Obviously, it's not feasible. It's 253 pips. You just look for a scalp trade within there. So basically, the point of this is that when you find a longer term trend like this, right, and you see that it's bounced off this level, this now gives you opportunities. You know that we're very bullish now. We're very bullish because institutions are clearly showing that they want to buy, right? So you look for opportunities in here, to buy. Look at this teacup, right? What I would have done was just on this last teacup here, taking your Fibonacci, last leg of the teacup right here, take your Fibonacci and draw it to the next high. Wait for it to come back down to that 0.79 or 0.62 level. We're bullish around this area. So you put your your buy position there, keep your stop loss below that leg. Set your take profit, to one of these targets up here. -1, -1.5. That's a 1 in 5.6 trade, right? So if you invested 10%, you would have made 50% on this trade, but really 56%, 5.6. So that's a quick lesson on USDCHF. It's been a while since I've been on this channel. Thanks for sticking around, guys. And continue to like, continue to subscribe, share this with everyone you know, man. This is great, life-changing stuff. All right? Thanks for sticking around.